welcome on back everyone to another stock market stream. A little bit of anxiety this morning as there's some rumors circulating that are very difficult to substantiate anywhere regarding potential banking drama. Though that said, we did see some more reverse repo. Well, actually, hold on, let me see here. Actually, just straight up repo facility. Operations pop off a little bit here. About what is that? About 26 billion bucks over at the Fed. You know, gotta inject some liquidity. Has a lot of people speculating over some drama, especially in the silver market. Silver rocketed yesterday up through about 84 bucks. Since come back down. You can actually see that chart over here, though not in full because a lot of this was futures trading. They actually went through about 84 bucks in the last about 12-ish hours, which has since come back down and relaxed, now back down to about 71 on silver, which is roughly where we were on Friday anyway. To me, it's somewhat GameStop-y, right? You got a lot of momentum into commodities. People see what gold has done. People are seeing what silver's doing. So people are excited about this this potential that more precious metals are going to move as well, or even industrial metals. A lot of enthusiasm around potentially copper making some juicy moves as well over time. A lot of it ends up being momentum that ends up fading over time. But we shall see. So with that, we'll go take a peek at some of the goodies. We've got market down only about 30 basis points now. Was down as much as 70 in the pre-market. None of the stock price action we're seeing since we've been open really signals that there's a lot of truth to this, banking crisis concern. Although obviously if we did have some form of a banking crisis at this point, we would be having one where the yield curve is in a shock-prone territory. That is the opposite of where we were during the banking crisis of 2023 when we were not shock-prone. So some folks are, seeing this as potentially a more risky time to have a shock. I agree with that. You've already got the Federal Reserve printing money. And if the Federal Reserve is already printing money and we're already using some of the facilities that we really haven't used in quite a while, then it does beg the question of, okay, well, what if things actually start breaking? So there are some real concerns there, but I think that broadly aligns with our thesis of, hey, let's stay a little cash rich. Let's not be too aggressive on debt or margin. In fact, let's go take a look at the FINRA margin statistics. I haven't done that in a hot minute. FINRA margin statistics. I always think that's a funny little place to look. Why does this not search it? Oh, because it's going to AI mode. I don't want AI mode. Just Google it, you dummy. There we go. Thank you. So there we go. Look at that. Margin for November up again at an all-time high. You can see this increase in margin is actually pretty remarkable. If I look at this difference here, I've got 12. You know what? Let's write this down just because it's entertaining. We can kind of see the rate of change of margin, and we could write this down. So let's go pop into here. And let's go see what people are up to in the way of margin. So this right here is an increase of about 2.6%, which times 12 is about, wait a sec. Did I do this right? 1214 divided by 1183. Yeah, it's 2.6. 2.6 times 12. That's a 31% annualized increase, because these are month-over-month changes, right? So it really shows you the aggressiveness that we're seeing in margin increases right now. But let's go ahead and see how that has changed over time. So if I go here, 1183 divided by 1126, 5. That is a 60% annualized increase. So it's actually slowed down a little bit in November as the market probably, had a little bit of an oopsie-doopsies there in November. A little bit of a pullback, right? Nothing super surprising. 10. Makes sense as we were heading towards see, this was 6. So it's actually slowed down a little bit. 6.3 times 12. Yeah, that's about a 75% increase. on an annualized basis. But margin growth over here between July 1059 divided by 1022, 1059 divided by 1022, that's only 3.6. I'm going to stop doing the annualizations for a moment. Although it's not that hard. I guess I may as well just keep doing it because you just multiply it by 12. 3.6 times 12, 43. Kind of interesting to see where, like I bet you over here, yeah, this is where we actually saw a decline during Liberation. How interesting is that? Oh yeah, and even in March. Oh, and in January. Look at the beginning of the year. This is actually where we saw declines. So here we saw 918 divided by 937 at about a negative 2%. And then over here, I had 880 divided by 918, about negative 4%. And then over here, we had 850 divided by 880, negative 3.5%. And then we get back to positive, right? Right back up. 920, 920 divided by 850, about an 8%, 8.2% increase, a very rapid increase over here. But that sort of aggressiveness just continued. People taking out margin like crazy in this market. And that's a 9.4% increase. Holy smokes, that May to June period was insane. That's I think really when you had taco, pretty heavy taco over here. And then 1022 divided by 10007, a little bit of a relaxation here. So you really see that difference of taking out margin. As soon as the market gets a little bit more nervous, people take out less margin. But even still, even with that nervousness in November, people still net took out more margin. Kind of remarkable, actually. So, it always makes me a little nervous because, that's what fuels more rapid declines in markets is when people take on debt. But, it doesn't matter to me. It actually creates dip buying opportunities. But fascinating. So anyway, I think, broadly, there is nervousness around this rumor regarding the silver squeeze and therefore some form of a bank failure. I'm less inclined to believe this. I think it's mostly just internet rumoring, mostly because I feel like insiders would be trading on this. And we would see a substantially larger move to the downside right now. So I'm inclined to argue that this rumor is not one that's highly credible, but we'll see. We know the drama in the silver market is surprising. But anyway, let's go. Let's keep looking at some of the news. So let's see here. Let's go into the info. So we've talked about Grok. We talked about that in detail on Friday. Still decently excited about that. Let's see. SoftBank, Digital Bridge, 4Bill, Jeff Rules, fine. Yeah. Okay, so I haven't seen the information actually dump on Elon in quite a while. So so Ivan's talking about Fed injecting liquidity. Yeah, we actually started with that right here. And it is true. So I've got $26 billion right here. And then I've got another $16 billion right here on the 26th. So, so that would be Friday and today. Right, so that is showing up. So, but really there's little coverage on this rumor, mostly because it's a rumor other than, the volatility that we've seen with silver. I'm not seeing anything, at least from institutions regarding banks. I mean, I keep looking to see what institutional commentary is, and I see nothing on it. And I also don't see the movement in the stock market that would suggest they know. Because, if you're at a bank and you just got margin called, I would anticipate substantially more red in markets as the margin calls get covered, basically. But, I mean, forgive me for saying it, but I don't see any real drama here. This is like a benign day. So, I mean, Six Flags is up 4.7%. Good for them, but they're also well down since the Kelsey brothers got in on it. Bitcoin is still below Michael Saylor's recent entry price. He just bought some more at 88 or whatever, which is not uncommon because he basically sets the market. As you see Bitcoin pump on the weekend, it's like, oh, people are bullish. No, it's just Michael Saylor buying, which is kind of entertaining. Problem: all investor money isn't on a buy side waiting. P.S. This sucks. I'm not exactly sure what you're talking about, but okay. Let's go back. Somebody says, what if this is just a hit report? What, the silver thing or the Tesla article that I was pulling up on the information? I mean, I say it all the time, like, Elon is one of the best salespeople that exists. And in fairness, he is credible, right? Like, he has historical credibility because he's done phenomenal things. He has the best autonomous driving product that is available to consumers on the market today, bar none. It's the best product available to consumers, available right now, where consumers can have it in their own vehicles, right? There's no question of that. He's done incredible things with SpaceX. Starlink is a fantastic product. The reusable rocket booster is fantastic. That we're able to capture some of these rockets on little towers with little pins is shocking as well. But a lot of this is, reusable rocket booster technology merged with really good GPS. Drones can auto land really well these days as well. And it's not to sort of mitigate the incredibleness. It's to say that Elon has a basis for doing incredible things. Megapacks, the home batteries. These are all great products. And I think that's why Tesla trades for the valuation it does, because there's so much belief that if anybody can do it, Elon can do it. And so people are willing to pay any price for it. But, something that we mentioned in the Alpha report this morning is we were looking at this AI stock. And so we're looking at an AI stock and we're like, wow, this software company is down 35% from all-time highs. And so we go analyze revenues, balance sheet, cash flow statement, earnings call, like we usually do in the Alpha report. And we're like, folks, there's nothing wrong with this company. The only thing that was wrong is the company traded for way too high of a valuation previously. And so it's now compressed to more of a fair valuation. That doesn't mean it's a good deal. It just means it's more of a fair valuation right now. And so unfortunately, I think that's what Tesla has ahead of it is valuation compression, because right now it is propped up a little bit on Elon's salesmanship. And again, he deserves that because he's done such a phenomenal job in the past. But anyway, a quick reminder, if you haven't yet checked it out, you can go to meetkevin.com. You can join the Meet Kevin membership. Remember, the membership includes the new Reinvest course. That's completely released. Stocks course, real estate course, sales course, property management course, YouTube course, productivity course, Trumponomics, and of course Reinvest is sort of the continuation of Trumponomics. The course member live streams, the Alpha reports every day. It is a lot. That's all at meetkevin.com. But anyway, let's go in here. How Elon promised? Oh, we're gonna have an expiring coupon code as well. It's gonna be code release the app is the expiring code, because we are releasing the Reinvest AI within the next couple days here, which is really exciting to us. It's kind of a game changer. I think that's why so many people have, like, even over the weekend. I woke up this morning and I'm like, oh my gosh, I was looking at the notifications for the investments that came in just over the last 24 hours or whatever, and you just see them here, like $69,000, 19, 14, 58, 59, 19, 50, and it just, like, the list goes on. It's like, oh, wow. But I think that's part of the deadline rush of, House Hike's fundraise is closing on the 31st. How Elon's promises for self-driving AI and robots clashed with reality. Okay, whether you consider Elon a visionary or a liar. That's such a wild opening. He has a long record of aggressive deadlines that his companies don't meet. I mean, this is true. That is very true. But innovation takes time. So let's see here. On one hand, the business as usual for Musk. Critical areas of success seem to be the autonomous taxi service. Given declining demand for electric vehicles, Tesla will report fourth quarter earning delivery figures on Friday. Oh, we've got delivery figures coming up for Tesla. Analysts expect they will show that 2025 has been the second year in a row of falling vehicle deliveries. Musk has repeatedly walked back or missed his self-imposed 2025 targets for robotaxis and other self-driving vehicles, putting Tesla further behind Waymo. In July, he expected a robotaxi service will be available to half of the U.S. population by the end of the year, subject to reg approvals. In October, Musk dialed this back with a goal of launching in 8 to 10 metro areas by the end of 2025. But in December, Tesla has not expanded outside of Austin and San Francisco. And it still uses human supervisors in all customer rides in both cities. In all customer rides. That's an interesting clarification because they did have that one autonomous leaked video. Somebody here says parabolic move up on silver is never a good thing. Well, no, I mean, you have to consider, like, we are in a new world of momentum, and it's really important as a fundamental investor to know. Hold on. There's a. What is this? This is from a Hershey Kiss. There's one of the little tips from a Hershey Kiss on my floor. Sorry, I hate it when things are dirty. I'm gonna clean that up. Anyway, so, yeah. It's sort of like a GME moment is the way I call it. It's very GameStop-y, right? Like somebody usually gets hurt when you have these parabolic moves, and I think that's in part why, I hate to say it, but Robinhood had to, like, kill the buy button, which, pissed off a lot of people, but it's because, a lot of institutions are probably starting to get bent out of shape. And then you get into financial stability concerns, and the Fed gets involved, and it just turns into a mess very quickly. So any kind of parabolic moves in assets that usually are low volatility are, generally not good. Somebody ends up getting screwed pretty hard, and then when it's a bank or an institution, it just pisses more people off. Hold on a sec, I got a dead computer over here. Let me turn this puppy on. There we go. All right. So anyway, continuing on. What's going on here today? Okay. I'm losing a fight over here. Hold on a second. There we go. All right. Sorry. I went to war and I was losing, but it's okay. We came out ahead. Waymo, meanwhile, has been offering rides without drivers in 5 cities. Company has far more autonomous taxis than Tesla, all of them without backup people. Musk, who made the audacious promises about self-driving in private vehicles in April, promised massive technological leap, saying drivers would be able to go to sleep in your car and wake up at your destination in 2025 by the end of the year. This has not been the case. Still, I will say some of the tech is pretty good, though. I mean, the FSD, have you ever tried it on Mad Max? It's actually kind of incredible. It drives like a true D-bag on the highway. It's hilarious. So, like, I generally have it in, like, chill mode, and the car's fantastic. But it's kind of incredible that you could set the AI now to drive like a true douche on the highways. Cuscan Morales writes, in all caps, dude, I'm not getting notifications on YouTube, and it's set to all. Okay, so welcome to the boat, okay? The vast majority of us here, we already know that. YouTube notifications, even if you say all notifications, YouTube will not give you all notifications. Like, they will decide whether to send you notifications or not, which is very annoying. But it's actually exactly why we created this free app. It's called the Meet Kevin app. You get the, if you're a member, you get the alpha report. But even if you get the free, you get the data, you get the daily wealth, you get the videos, whatever, right? Like, you can see the videos archive over here. You could go to the different playlists if you want, whatever you want. So we made this app because of that problem that you're describing. So if on Apple or Android you download the Meet Kevin app, you could customize your notifications. So you could say, I only want your live streams, I only want your fed videos. You could uncheck pilot videos if you don't want that crap, you know, whatever, right? So that's why we made the app. That's what started the idea of like, oh, let's have an app, because YouTube just doesn't send notifications to everybody, and people get pissed about it because they're like, hey, I clicked all notifications. Why don't I get all? I don't know. Ask YouTube. But so we just made an app to sort of bypass that, if you will. So you're welcome to use that, and then you don't have to complain. But anyway, to be sure, Musk's blowing through deadlines for Tesla is nothing new. The habit hasn't stopped investors from pouring. Oh, look at the double space here. Haha, caught him. From pouring dollars into Musk's vision. Yeah, I mean, that's exactly what this is. This is Elon's vision. Tesla shares are up 27% this year, $1 trillion compensation package. Elsewhere, the company's fallen short of its production goals for Optimus. Musk said Tesla would produce 5,000 Optimus robots by the end of 2025. That's been slashed to 2,000 and then further cut again. Well, they did also say that they were not going to be able to scale the Optimus 2, and then they had to create the Optimus 3. Yeah, due to technical issues or whatever. But yeah, I mean, that doesn't change Elon's ambition for some of these targets. So, you know, they're not wrong for writing this out. I don't think any of this so far is like a hit piece. I think so far this is just broadly a summation of what Elon has said and what reality is. So, okay. Let's see here. Musk and SpaceX have also said in 2026, Optimus will go to Mars aboard the Starship. Right. Says the mission is on track for next year, and there are renderings of Optimus walking on Mars. He can barely walk in the United States. Okay. Slight chance that the Starship will be crewed by Optimus, and that could happen in November or December of 26. But he said that 3.5 years into the future was a more likely target. Okay. I mean, I guess there's always a slight chance of everything, you know? Talking less about Mars, more talking about data centers in space. A key priority for the Trump administration. Yes. No, that's a great way to, I will say, I have not seen as many Starlink ads historically as I have just recently in like the last couple months. I honestly feel like what's going on is what they're doing is they are massively pumping advertisements for Starlink so they could get more customers and pump like their numbers, their annual recurring revenue, so they could get the fattest valuation on Wall Street possible. Now, don't get me wrong, like I understand this. In fact, I want to show you something. I think this is kind of interesting. Well, we're going to write it together, so it's not like it's a big secret here. But let's see here. Let's pop this open. Okay, so SpaceX ads for Starlink have been wild. Everywhere now. Billboards, airports, all over X, etc. My guess is they want to pump ARR for IPO. Makes sense. Now, like, I'm fine with that, you know, as an investor in SpaceX. I want the biggest pump freaking possible, you know? And then I want that pump to last so I can dump. You know? Because it takes a while to get your shares, and then, you know, you want to dump at the top. But anyway, I get it. And it's something that I look at, you know, with House Hack as well. Like, the way we look at it is, I mean, we right now, we sell lifetime access to our AI, mostly because we're in beta, right? So, like, we're going to expire that soon. We're releasing the product within the next 3 days here. So, you know, by the end of the year as promised. And the app will be out for those of you getting the Reinvest AI or House Hack AI, whatever you want to call it. And what's so interesting about it is when you actually switch, in future, you go to monthly, right? And this is just the lesson here. When you go to monthly or annual, you get the ARR multiple, right? So let's say SpaceX gets, I don't know, $600 a year from you for Starlink internet. That's at, at $50 a month. They might be able to pull, if they pull 20x ARR, that $600 is actually worth $12,000 in enterprise value for SpaceX. So for example, if you spend $1,000 to acquire a SpaceX customer or Starlink customer on ads, and you just created $12,000 of enterprise value for your IPO, spend more on ads, right? I think that's what's happening here at SpaceX, and it makes a lot of sense to me because they want that ARR multiple. I get it as well. When we're gonna move, once the product's like really out of its beta phase, we're gonna move to a pretty expensive monthly or annual plan for our House Hacker Reinvest AI. And the point is exactly this. Like, we want to IPO the company too. And so we want that annual recurring revenue. We want the multiple. We want the enterprise value. We want to do the same thing. Obviously in a real estate AI world, because I think that's, where my expertise is. And I think we do a great job there. And I think we've got a great product. I was just showing the product to somebody who's pretty big in real estate. Like one of the first things they look at, they're like, wow, that is actually a really good deal. It's like sniping deals, it's incredible. So anyway, I'm very excited about that. But I think this is what's going on with SpaceX. And I know this is a little tangential to that Elon article we were just looking at with the information, but I want you to think about this, because this also means, like, where does that ad money go, right? So where does that ad money go? Well, Google, Meta, these are huge beneficiaries. To some extent, Netflix, right? Like, it's still a very small portion of their revenue. But I think this is very, very interesting to me. I think there's a lot of excitement in where this money goes. Anyway, just to be clear, it's not a solicitation for House Hack. It's just a comparison to SpaceX. And let's go back to the Elon article. We do have the fundraise ending. Is it Wednesday? Is Wednesday the 31st already? So it's insane. Like, we're over $3 million already. Like, people have plowed money in. And part of us on the inside, we kind of don't want the fundraise to keep going. We're like, why have we closed it sooner? Because now we're so excited about AI, we don't really need the cash. Oh, wow. Holy crap. It says, minus some minor adjustments. I'll put the screenshot up on screen here. Wow, it's at roughly 3.8. There's some most of the money that goes into here is just fundraising into this account. Though there are a couple little check deposits, like, $20,000 commission check or whatever that'll come in. But I'll show you this. This is crazy. Let me see here. This is our money in account for House Hack. Mostly fundraising, right? So this is not where this is not income, because like rental revenue or AI income goes somewhere else. AI income or rental revenues not included in this, as they go to a different account. But this is, I think it's because we announced the deadline, but it's actually a pretty incredible month. I don't know where people are getting the money from, but thank you. So anyway, back to this. So in recent months, Musk has been talking less about Mars, more about data centers in space. Right. Yeah. Keep in mind, I'm also of the mindset that Jensen Huang over at NVIDIA, he knows we are at the plateau of artificial intelligence capex. We are at, I said this in my daily wealth, which you could get for free. Meet Kevin app is the easy way to get it. And, I think that encyclopedic AI will actually reduce the need substantially for more of these like Blackwell and Rubin-centric data centers. Inference will still be important, but this training of LLMs is a little overblown right now and overbubbled. And so this data center in space thing, while it's a cool idea, and it will happen in the long term, I don't think it's anywhere close. Musk has spent much of 2025 working on XAI, the company that's racing to catch up with OpenAI and Google. July, they released Grok 4. Then they promised they'd follow up with a crushingly good model by the end of the year after 5. But in November, he said that 5 would instead be released in first quarter. Oh, okay, with 5. But 5 is going to get delayed to 2026. I mean, whatever. Musk has increasingly focused on XAI. As he's increased focus on XAI, he spent less time on social media. Really? Has he been tweeting less? In January, Linda said that X would launch a payment service. In March, X was acquired by XAI. Yaccarino stepped down. X says it's still moving forward with X money. The regulator has raised concerns to X staff about the service's proposed design. It doesn't surprise me that financial regulators, especially in New York, are nervous about Elon's plans. Some of that's obviously going to be political, but New York is probably one of the most challenging states when it comes to financial licenses, whether it's banking or lending or whatever. I'd say California is substantially easier than New York, which is kind of a crazy thing to say. Kind of crazy, huh? In December, Musk gave a brief update on X Money, saying it's been launched internally. Okay. And that's it. Yeah, so they basically just... Here's somebody shilling from the CEO of Healthy Traditions. He's clearly a liar. And his lies are recorded in the public realm. I always wonder, I am surprised that there aren't some. If Reinvest AI gets 20K subscribers, we can get a 10x return. That's why I invested. I obviously I don't like projections or whatever. I appreciate your donation and you saying that, but I mean we were just brainstorming even over the weekend our roadmap for 2026 and what we're gonna do for this app. I mean what we've done even in just the last 6 months is so crazy. We are so excited about it. So forgive me for, mentioning it often. It also shapes my view of what's going on in artificial intelligence because I can see that we don't need AGI. We've been training our machine learning since 2018. And look, the market's down 6-7. We've been training our machine learning since 2018, I'm sorry. It's somewhere in there. I can't remember exactly which year it was. I'm pretty sure it was 2018. Mostly because I wanted to use myself a tool that would help me find deals more rapidly because I was so overwhelmed. And so, now seeing what's available and how far artificial intelligence has come is really exciting because you could really apply it to so many different aspects of work and life and deal finding and finance and compliance that you don't even need AGI. We have a generation worth of innovation ahead of us. It's exciting. Now, does that mean there won't be a recession? No, there could totally be a recession. I think the biggest beneficiaries of a lot of these products are going to be corporations. The efficiency building AI. I mean, we were just looking at ServiceNow's earnings call. Let me see if I could find a little snippet here. We did this fundamental analysis this morning in the Alpha Report on ServiceNow, and there was a snippet that I put in about, where was it? I think this is pretty, yeah, here. Look at this. Margin target grew from 30.5% to 31% as AI operational efficiencies continue to drive incremental leverage. Okay, and then I wrote on here sort of a translation: AI operational efficiencies equal less hiring. I really believe that. I think it's the companies that sort of pick up these coins on the floor and this EPS And you don't need artificial general intelligence to do it. It's good enough to do some really good damage. So I'm really impressed with just the tools that we have available to build really cool things. And so anyway, like while we are building these things out, I use the same technologies that I see and what we can build and what we can do in my fundamental analysis on other stocks. And that's what I'd like to share with all of y'all. You know, whether you're a member or not, I like to share this stuff with y'all because this is just what I'm seeing is I think companies are going to get rich off AI, really. And then, of course, you know, consumers benefit a lot, not only from chat kind of style AI, but I also think productivity enhancers or, you know, maybe even net worth snipers. I feel like that'd be such a cool name. The net worth sniper. And then you need like a Borderlands style like banner for it. Let's do Borderlands 1 video game. Did anybody ever play Borderlands 1? Yeah, right here. Xbox. Just like this. And you just need to like the banner across. You know, I'm gonna ask Gemini to do it. Hey, let's do create an image of a banner. The net worth sniper with a background of real estate, implying sniping deals in real estate, and use a Borderlands 1 video game style. Let's see what it could do. Anyway, so yeah, I love sharing that kind of stuff because it's so interesting. And don't get me wrong, there's still real shocks in the actual market, or shock risk. Hold on a sec. I just got a headline here. Putin held phone call with Trump. Trump and his key advisors informed Putin in detail about negotiations with Ukraine. Of course Trump did. He just turns around and tells everything Zelensky said to Putin. The U.S. held discussions on the need for Ukraine to make real steps towards a settlement. Putin told Trump that Ukraine launched a drone attack on the presidential residence in Russia. Trump was shocked when Putin told him about the drone attack on the presidential residence. I mean, in fairness, that's coming from the Russian, you know, foreign ministers here. So it could all be fugazi. But anyway, oh yeah. I mean, honestly, this is kind of cool that AI can slap this kind of stuff together. So look at this. The net worth sniper. Boom. But otherwise, you know, that's not bad. Good job, Gemini. Redo, but with better artwork along the floor. There shouldn't be any pixel art in Borderlands. Anyway, so yeah, anyway, GoldenEye 007. I heard they're coming out with a new 007, by the way, a new 007 video game. Like, what was it? First Light? I don't know what it's called. But anyway. All right, let's see what else is news over here. So, let's see. We looked at margin debt. We looked at the information dumping a little bit on Elon. We looked at the repo facility and repo usage over the weekend rather. We looked at silver's decline, which we saw here. It's 71 bucks now, down about 7-ish% here. Somebody says, parents bought silver at $27 an ounce. Would you sell? They have 200 ounces. Wow, good for you. Yeah, I mean, like, I can't give you personalized advice, or your parents. I don't know what your guys' situation is. But, like, dude, when I see a candle like this, why the hell would I not have a trailing stop? You know? Look at this. Look at that candle on the 5-year, bro. How could you not have a trailing stop on this? Like, again, this is not personalized advice to you. I am asking you a question. How the hell could you not have a trailing stop of, like, 10% on this? So if it goes up again tomorrow, great, fine. But, like, if it keeps falling and it's just a meme trade, come on, man. Like, we all know how momentum works, dude. It's straight up and then it bleeds out. There's nothing fundamental in this silver squeeze. So, yeah, I mean, like, that's my opinion. But anywho. So, let's see here. Bulls only. Every Wall Street analyst now projects a stock rally. Let's see here. Yeah, I always wonder when everybody is so bullish. Like, is that a time to be contrarian, you know? But anyway, let's write some of this down into our data tab over here. So, forecast. Oops, dislike when it does that. I guess I will rewrite that. Forecast, boom, bitty boom, bitty boom. B-O-M-B, bomb. C-O-M-B, calm? No, comb. All right, forecast. So what do we got here? Let's see here. Wall Street expecting fourth straight year of gains in 2026. That would be the first time in 20 years. Wow. Let's see here. After 3 years, equity markets, bearish call, sell-side analysts, matching lockstep. Average S&P forecast implies 9%. Average 2026 forecast implies 9% for S&P 500. Out of 21 Bloomberg surveyed institutions and or forecasters, no one, not a single one, no one has a negative forecast. As a contrarian, that sounds very bearish. I mean, like, really? Not a single person has a negative forecast? But you also kind of have to remember that analysts are paid to be bullish, right? Remember, analysts are paid to be bulls. You could also argue that Elon is to some extent paid to be a bull. You know, these bullish forecasts are very, you know, they pump the stock, and that benefits all the customers. I mean, think about the cycle here. Bullishness pays. So think of the cycle, right? So let's analyze the Elon cycle together. So big prediction, pumps stock, which then pays workers more, incentivizes workers more, potentially lets the big prediction come closer faster as people work harder, as they're excited, getting paid bigly, right? So it's almost like, can you manifest a big prediction by, you know, faux pumping it? Or, well, it's not even faux pumping, it's just straight up pumping it. By pumping or hyping it. Maybe. You know, I think the Elon analogy is a good one. Not only with robo-taxis or with Optimus, you know, walking on Mars, or the space data centers, or, you know, whatever. Like, it's Elon trying to manifest his version of the future. Okay. Good for him, I guess. Okay. So, the information, we'll just say because it's not really, like, some would say this is a hit piece. I don't really think it is. I think it's more of a summary. The information has a summary of some of Elon's predictions this year. There we go. I think that's a fairer way to put it. Anyway, all right, good. So what else do we have here? So the doomers say light economic calendar. Stocks are going to close out. Likely need tech to do much of the heavy lifting. Okay. Blah, 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 blah. Dollar, optimistic consensus, saw that. Silver sell-off. Gold was down as much as 4%. It also makes you wonder, when stocks are lagging behind gold and silver, what phase of the cycle is that? Look at that. They normalized gold versus... this is actually a fantastic chart. This is a very, very good chart here by Bloomberg. I love that. Sort of just comparing the returns of the three. And let's put some arrows on that. Look at that a little closer here. So, have you seen those AI wow shorts of a troll doing selfie vlogs? No, but that's hilarious. I'll have to look that up. Thank you for suggesting that. All right, so here's silver, and then, I can't help but feel safe haven assets memeing is a risky signal. Here is the divergence between gold, silver, and the S&P 500. All right, so that would be here, and then the divergence would be, well, frankly, like this gap right here. So we'll just do something like this. Annotate line. There we go. Slap that here. At least to here. Get that a little thinner. Yeah, that's pretty remarkable. That's to gold, right? To gold and then to silver. It's pretty remarkable. Okay, cool. I feel like the textbook is almost sort of writing itself. And then gold and silver squeeze versus the S&P 500. Where, like, in hindsight, we'll look back at this in 10 years and be like, oh, yeah, okay, well, that was the most obvious recession coming ever. Who knows? It's like, oh, you mean to tell me gold and silver squeezed and that wasn't enough of a sign? But obviously when you're in the moment, it's like, no, man, it's fundamental. No, it's not. That's crazy. So, somebody says, Kevin, can we split reinvest transaction on 2 cards? I mean, technically, yeah. I always prefer when people just wire or ACH, but we do have that option. So, like, if you go to the invest section because you want to lock in the 5% plus the upside, real estate backed, invest with credit card, ACH, or wires, no fees, which obviously, like, we should probably do we're gonna do like a filing or whatever where we're like, hey, like, AI is now actually a significant portion of our revenue, because then, previously we've always been talking about like, hey, like, yeah, we've got this real estate AI, but we've never monetized it until like Black Friday and the week of Black Friday, and now it's been a month and we're like, oh no, we're still making, like, people are still signing up for the AI. But anyway, so yeah, you can, but I always encourage people, make sure you pay this off. Like, I don't like people going into debt. But so yeah, if you want to split it into 2 transactions, you can. Just, you have to email us. Here.
Email ir@househack.com.
Yeah. So, it's also kind of exciting. We, as we release this app, we're going to raise the price, and we'll, but people are still buying this. And so we're really excited about it because it's we're just about to release it within the next couple days here. So it's really exciting, and it's already expanded from what's here. Like, we've already got some more features in here, which is really cool. But yeah, thanks for asking. Okay, cool. So, yeah, the deadline's Wednesday to invest. Okay. This is not good. Silver is needed in many industrial processes. Musk replied, well, yeah, that's fair. Let's see here. Somebody writes bullish Netflix. I actually am bullish Netflix. You know, part of that is this thesis right here on the SpaceX ads. Let me actually slap that over here. But I'm very excited about Netflix's advertising push over time. So we'll slap that onto the data tab. There we go. Sometimes I write in like a little text edit, and I feel like I should just put it here. I also hear babies screaming outside. And hopefully you don't. They gotta be really loud to get through two of those doors. Those are 500-pound doors. But anyway, sometimes they are. All right, so Qs are still down 67 basis points. Nobody's talking about this drama really in this banking rumor. I guess we'll find out soon enough. But let's see here. Then bonds. Yeah, the 10-2 didn't really move. The 10-2 is still at 66, so up like a bip. So that didn't move much. I've got oil. WTI is still under 60. Brent back up over 60. Bitcoin 87.3, so below what Michael Saylor just bought for. I think Jack is like going crazy with them or something. It sounds like it doesn't sound like anyone's mad, but this is a lot of screaming I hear out there, which is kind of entertaining. Like, I feel like I'm missing out a little bit. I'm getting a little bit of FOMO. What's going on? Oh yeah, they're all playing right outside my door. There's like a whole cluster of them right outside of my door. They're playing ball or whatever out there. I can't. There's my vault. They're having a whole party out there without me. All right. Now I know what the screaming is. All right. Anyway. So let's see here. Okay. Oh, blah, blah, blah. Warden, Monas, whatever, blah, blah, blah. Okay. So we saw repo. Let's go see what else the doomers have. Let's see. SoftBank, Lulu founder, blah, blah, blah. Housing market. What's worse than cherry pick government data, no data at all? It was hard to know what to believe this year. In the old days, there were conspiracies about the moon landing. These days, it feels like there's a conspiracy about everything. Yeah. The truth is up for grabs alongside crusty government databases. One of the rallying cries of our conspiratorial age is do your own research, but that's not easy in the best of times. Some data requires expertise and context to interpret. Yeah, I agree with that. Some reliable government databases have disappeared altogether. Others are incomplete thanks to the shutdown. Yes, long delayed numbers from the shutdown are now emerging. But this new information is only adding to the confusion. The data is incomplete and partially being drawn from other sources, making comparisons difficult. Right. Yeah. Even temporary losses in government data can be quite damaging. Right. Well, like, that's the problem. Is, you know, if you changed what the components of the data are, then how do you compare to a prior period? You can't. Let's see here. Okay. then they get into some examples. Less interesting today. Let's try Zero Hedge for a moment. Let's go see what they've got. Oh, Zero Hedge. No smoking gun. Traders search for catalyst. The silver sudden done. Yeah, this is what everybody's kind of freaking out about. It's like, hey, you know, what's going on? Okay. Hold on one sec. Blah, 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 blah. Blah, 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 blah. Okay. Alright. That's fine. Okay, cool. So, Goldman Sachs trading desk. They're only 3 days ahead of the new year. Commodities remain volatile. However, risk off in the afternoon without smoking gun. Precious metals had significant correction. Palladium and platinum both ended limit down. Bloomberg MicroStrategist, there's no clear driver for the pullback. The low levels of liquidity and silver's parabolic rise mean that it's vulnerable to a snapback. Right. So, you know, some people warned or rumored that, you know, a bank got margin called. Let's see here. Oh, some attributed it to Elon's tweet. Okay. Margin increases. It's worth noting, increasing in margin, let's see here. While increased margin requirements may have contributed to the sell-off, elevated volatility in price in the past week has already led funds to reduce length. Right. That's always the funny thing, is they can change the margin requirements on you at any time. So, you know, that's one of the dangers of margin again. All right. What else? So, let's see here. Protests erupt in Iran. Rial drops to record low. Tough job market. Is people using dating apps to get interviews? No way. That's hilarious. To try to match with like match with HR people. This fall, a 20-year-old junior tailored her Hinge profile to connect with people who could offer her jobs. I mean, it's like, we'll sleep for jobs. I feel like my approach to dating apps is a bit like it's a networking platform. Lol. Hey, you wanna be my girlfriend? No, but you got a job for me? Oh. Weird. Tesla Cybertruck flop proves costly for South Korean supplier. Huh. What is this? Okay. Here we have a supplier to Tesla ended up providing a tiny fraction of battery material the car maker ordered almost 3 years ago, in part due to issues with the Cybertruck. So this would have to do with the new cells, right? A contract that was originally 2.6 billion US dollars or 3.3 trillion won had been sliced by 99%. Wow. High nickel cathode material that L&F was contracted to supply was meant to be used in Cybertruck batteries. Wow, 99% reduction. Tom from MySpace says you're right. Oh, thank you. We'll start the AI MySpace together. We're gonna take it back from Zuck together. Some cultures have a different view on HR. Yeah. Somebody says, where do you see Tesla going in the short term? Well, a 433 is a natural next level for Tesla. We weren't really able to break out on this uptrend right here, which is a decent uptrend. I don't know if we can really line this, but the next support I have is down, unfortunately. So this is yeah, this isn't even really great because I can't even get a third point here. You know, the trend has been very nice to Tesla. You know, something not perfect. I'm gonna mark that as just super gray over here. So, I think down in the next 6 months is more likely than up. I just think there are too many negative catalysts for them. Not just deliveries, but the tax credits expiring, Bitcoin losses, costs going up. It's, delays in Optimus or Robotaxi. Like, all of these are pretty negative catalysts in the near term. Okay, let's see here. Year-end profit taking? Yeah, sure. Okay, scant material was provided as vehicles development repeatedly postponed. Fine. Supply contract was also affected by broader policy and economic issues, including the reduction in subsidies. Well, yeah, that makes sense. No changes in shipments. What are the current expected deliveries for tests? I mean, I guess that would be worth taking a look at. Let's go look at expectations for delivs. Let's see here. Okay. Tesla. Should be able to find them in here somewhere. Okay. Yeah, and for those of you wondering, we are going to have an expiring code. We haven't had one like all month, since like Black Friday. So we're going to have a big price increase and an expiring coupon on both. We just align the timing of it now. MeetKevin.com and the reinvest.co or househack.com, the AI product. So Alpha Report being one thing, the morning live streams, and then the reinvest AI. So you can get those at either MeetKevin.com or househack.com. Okay, let's see here. So I'm going to go to... Let's see here. Per share stock value. Let's try custom. What do I got here? I'm going to try to find... No, nothing's under there. Ratio. Segments. Maybe segments. Product segment. Yeah, let's take a look here. Okay, so segments, automotives, energy gen. Okay, here we go. So we're expecting 82 billion of automotive and 12.6 billion of energy gen. Okay, here we go. Number of vehicles sold. Okay, we're going to write down these estimates. Let's do this. So... Oh, that's true. I did have Tony. You're right. That was that, like, intraday one. I apologize. You're right. We did have Tony there for a hot minute. That would win Tony. Tony. Good man. Okay, so let's write down these Tesla estimates so you can have them as well. Tesla estimates. Only fan/meet Kevin. No. All right. So I've got S and X estimates at 34,284 year end, and then I have S and 3 and Y at 1591696 year end. And then we will have other models at 56.5K. So, like, inclusive of the Cybertruck and otherwise. Okay. So... number of vehicles produced. Cybertruck production expected to go down a lot. Just basically 13,800 for the year. Wow. So these would be deliveries. I should make a note. Deliveries and production. The oh no from Planet of the Apes. I know, right? Oh no. That's great. That would be a good one. Production, we've got SX at 54067 on the estimate, and 3 and Y I've got at 1541058. So obviously in aggregate, I'm going to be down quite a bit on deliveries over time. So if I do 2022, we did 1.313. 2023, we did 1.1808. 2024, 1.789. 2025, 1.654 in 2025. And then next year, they actually think we'll go back to growth. That'd be a nice forecast. And that would be back to 1.805. So really just back to 2023 levels. A little bit of growth there. Current forecast for earnings. Let's find out. Tesla forecast earnings. I've got Jan 29th earnings. 29th, not 2029. Obviously multiple negative catalysts, which would be the Bitcoin decline, end of vehicle tax credit in Q3, which shows up in Q4 pain. This will also be the last quarter for home tax credits on purchases of home energy and solar. So that's not great, which that creates pain in Q1. So, we've got those negative catalysts, and then obviously the Robotaxi and Optimus delays. Question is how much of that is already priced in? What's Tesla's current peg? If I go to the course member tab, let's see here. Current peg is 6.86 in the course member tab. So this is a nice tool. You could always look that up if you're in the Alpha membership. Current peg based on Wall Street peg ratio of 6.8. What is it? 6.86. Suggests that as a manufacturer, a fair value is. This always pisses bulls off when I do the peg ratio. But if I go to 1.67 divided by 6.86, I've got about a negative 75 here. And on a service valuation, 2.69 divided by 2.69 divided by 6.86 puts me down about 60%. So either way you slice it, you've got a lot of negative catalysts and you have a period of overvaluation. I'd like to just also pull the attention or suggest attention to, for a moment, look at ServiceNow. Look at Now stock. Margins up, leverage up, earnings solid, EAI play, yet down 35% from peak before liberation. Kind of interesting, a lot of this now at fair service valuation. So this reversion does occur. Somebody writes, I'm most intrigued by this, quote, biggest tax refund season ever. Yeah, I think people are going to be a little bit disappointed by their tax refunds. So many of the, tax credits from the Big Beautiful Bill have a lot of limitations. You know, whether it's the tax on tips or Social Security, like these have limitations, or vehicle interest, you know, really requires you actually be paying interest. I think a lot of people will buy a car, end up getting, you know, with the idea that they're going to get a deduction on interest, and then they end up getting 0% financing, and then they don't actually have interest. Sort of this ultimate irony. Anyway, market's just still chilling in the red over here. Okay, let's keep going. So we looked a little bit at the Doomers. How's the Journal doing today? Let's see here. Yeah, 50-year security guarantee is what Ukraine wants. Trump's offering 15 years. Trump military drills sends stern warning after U.S. arms sales to Taiwan. Right. Okay. Very little, like, in the way of sort of broader news today. Nothing really on the Times either. When AI took my job, I bought a chainsaw. Is this a joke? I told a chatbot that AI was swallowing more and more of my work as a copywriter and I needed a way to survive. The bot suggested I buy a chainsaw. Yeah. And this is just a story about, based on your situation, skills, and urgent need for income, tree work sales is almost certainly your path to real money. Huh. At 52, you want to go buy a chainsaw. Anyway. All right. So, what do we got over here? Michael, thanks for the new verse. Oh, yeah. Hey, anytime. Sonny said, I've been watching you. Sebastian, I've been watching you since 2019. Thanks for the content. Oh, thank you. It's QE now or everything after? No. We're not in QE now. This is the real money printing begins when everything goes to crap. You know, when everybody's in despair. Do you think insurance companies should have their stocks delisted so they don't have the fiduciary duty to screw over their customers in favor of investors? Well, I mean, this is quite the argument you've made there. And it's very difficult to unpackage because everybody hates insurance companies. But, you know, I think I've seen a lot of people make arguments that insurance companies should have, like, regulated margins, sort of like the gas company or the water company or whatever. But, you know, a company making profit should not be considered screwing over your customers. Like, look at Palantir. I'm just going to use them as a great example. Palantir makes a lot of money, but they make their customers more money. You know, they help their customers when their customers need them. I think the frustration people have with insurance companies is people believe that the insurance companies don't actually help them when they need them, and that's a fair point. To the extent that's true. But yeah, I mean, typically, you know, when a company is making money, it's because people are gleaning more value than they're paying, right? I mean, like, I always think, you know, I've had people in my courses since 2018, and, you know, I think those are folks who have been able to glean value for 7 years. They paid once, and, you know, they're winning off of this lifetime access of these course member live streams, in my opinion. And it's really exciting because, you know, I think that's a way of constantly being able to provide value. And so I think, if anything, you know, oftentimes in capitalism, customers can get a really good deal. But yeah, insurance companies are a funny one. So, Santa's good and bad, economy's list, AI's not your friend, blah, blah, blah. Man, a little boring today. Trump meeting Zelensky. All right. Let's go see The Economist. Uncertainty looms for Berkshire. No. Yeah, and it's so fascinating. There's so many rumors on the internet about this silver squeeze, but really nothing in the way of actual fact. What's a PEG ratio? It's price to earnings growth. So basically you divide the PE ratio of a company by their projected growth rate. So that way you could see, how expensive is the company relative to the growth that's being forecast, which I think is a really useful tool to projecting, when companies are fairly priced versus not fairly priced. Jeff says, roof leak cost 1.4 to fix. Agent told me not to file a claim. More problems than doing that. Deductible was 1K. Yeah. Yeah, I mean, they're not wrong, because now you go to sell the property and the property has a claim against it, It's like a black mark. So, yeah. All right, rising market, what is this? Fed soft landing narrative. Currently, investors are pricing in strong economic growth, robust earnings, smooth path of disinflation. Wall Street currently expects the bottom 493 stocks to contribute more to earnings than they have in the past 3 years. It's notable that over the last 3 years, the average rate for the bottom 493 was less than 3%. Right, very slow. So over the next 2 years, those earnings are expected to grow to over 11%. That's actually a very, very interesting statistic. Kevin, I heard that part of the reason why silver is breaking out is because there are more derivatives written against the actual supply of physical silver. Of course. Of course. I mean, that's always how it works. It's this spot palladium's down 17%. Oh my goodness. That's the securities market. It's speculation, and the speculation begets hedging, which begets more speculation. It's kind of insane. Palladium spot price. Let's try to pull that up. Oh man. Yeah, palladium down 16.3% here from its little squeezy D's. What about copper spot price? Let's check them out. All right, let's see what we got here. So we'll look at all of them. And then copper. Okay, so silver now down 8.7. Okay, so and gold's down about 4.25. So here's the year to date on gold. This tiny little drop over here on the right. Here's silver, which has just been an incredible chart. Copper still up, and then this is palladium. Wild. I mean, 100% return on a metal is insane. Steve, I'm in pain today. Metal prices are getting wrecked. Steve has got to be so up on his rocks. Okay, good. So, let's continue. It's weird. Continue is like what you hear when you lose in Super Smash Brothers, but it's also what pilots say just moments before landing. Is that a weird thing to compare? I don't know. I think that's weird. Continue. Okay. Doomers. Oh yeah, this was the Cybertruck flop. Let's also see, what do we have here? The head of a giant Wall Street bank was dining with a buy-side rival when an investor called bank's utilities, what some wasn't meant as an insult. The revenge of banks as private creditors lose their edge. Okay, whatever. How was Christmas? You guys, you gotta watch my Instagram stories, and then you can see, you know, all the Christmas fun and stuff. I try to post Instagram stories at me, Kevin, every single day. But yeah, we checked out the crazy on Christmas Day. We dipped out of here and checked out the crazy snow in what's it called? The Tahoe area. You know, I was driving through the snow at night, getting into across the 80 before they shut it down, getting into the Truckee area, and that was a little sketch. I mean, I had a 4-wheel. I rented a Jeep, but it wasn't a really good 4-wheel drive. Like, I definitely had the brakes lock up on me, well, once, but that's okay. I didn't hit anything. But surprising for a rental car. It wasn't a very good 4-wheel drive. But anyway, look at what the snow was like. I mean, this to me, this was just incredible. It was just such beautiful powder. It was ridiculous. Look at this. So here, I'll just fast forward just a little bit, just so you can see a little bit of how thick this snow is. Jack's over there somewhere behind me. But this is all like, sometimes you go and you look and this is all like frozen. And that's the worst. There's Jack. But this is all beautiful, like fluffy, soft powder. And it's amazing. So it was really fun. Highly encourage taking advantage of anytime there's like a big dump in the weather of going to some of these places and experiencing the snow. I mean, look at how white everything is. It's really a beautiful sort of like holiday environment to be in. But it's kind of like playing in a giant pillow. You know, Jack and I, we braved the blacks a few times, and it's so much easier when everything's powder because you're not slipping down on ice, you know? It's quite gorgeous. So, big fan. This, by the way, this is all on the Meta glasses. You know, not to shill Meta, but I'm a big fan of sort of like taking little video clips on our trips with the glasses, because then I don't have to sit there like a goose and hold the camera. I don't know, I think it's kind of cool. We went to Tahoe last Feb and it was straight concrete. Yeah, no, you definitely gotta check the weather. You know, watch the weather, because sometimes you can go and it's just like, you know, there's nothing. The skiing sucks. You know, it is like skiing on rocks or dirt. That's how Utah was about a week ago. That really sucked. But, oh well, I guess. So, anyway, yeah, I mean, queues have basically been sideways all day long. All day long. Queues have been sideways. So, not a big surprise, though. Steve says it is cool, allows you to experience the moment more. Exactly. You know, it's like, I don't know. I think I already took it out. But yeah, you know, we'll take a GoPro or an Insta360 or whatever, but then it's just so much more to process after the fact too. You know, the helmet cams are cool on the GoPros, but I think the glasses are gonna get rid of that, especially the big ones. You know, do I have Big Boy right here? I don't know if I have my Big Boy with me. I think it's in my ski jacket. Oh, no, I have it. I did put it in here. Yeah, this is the Big Boy. I used this. I have to say, the audio was very decent for kind of going fast. Let me see here. Did I have the right ones on? I don't know. And the problem is I'll have to look back to see if I was wearing my glasses, because I would interchange, because the batteries don't last long. I'd interchange between the Big Boys and the little regular glasses, and I thought these were actually really good relative to Let me just go look in my meta app really quick. Maybe I can show you. But will it tell me which is which? That's the problem. I gotta know which one's which. But usually you get a ton of wind noise. I actually don't know if it tells me after the fact which glasses I wore to take a clip of one. So I'll have to mess with it and figure it out. But I do think that's very interesting. Anyway, maybe I should have paid attention more. I'll figure it out. So, anywho, all right, back to where were we? Back to stuff. So, somebody's riding silver back to 55. Yeah, no kidding. All right, no smoking gun here. We saw that. Okay, let's go see if the suits have anything entertaining for us. Sometimes they do in the morning. 29th, I've got a Goldman piece this morning. Silver's round trip since Christmas. Okay, here we go. So a couple stories on this. Okay. What caused the rally? There's no one clear price action, but for some who are watching, a Telegraph headline appeared on Bloomberg mentioned silver is set for best year since 1979 as China crackdown fuels rally, referring to silver export restrictions from China, which have been known about since October 15th, so this is not new. An increase in margin requirements, ETF buying, sharp increase in retail participation could move to could be swaying here. Yeah, well, I think people like buying things that are going up. What about over here? Our desk included the week. Better for sale across the complex. There's substantial retracement in price action this morning as spot has languished. Okay. There's nothing really there. Okay. That's quiet. All right. U.S. pending home sales jumped to highest level since early 23. Let's go see. Where are catalysts this morning as well? Catalyst, we just got pending home sales. They did beat expectations. I've got minutes coming out on tomorrow. Then we're going to have weekly unemployment change numbers as well tomorrow, so that'll be cool. And then broadly still sideways right here. What about, let's go see Tesla projections by Troy. Let's see if Troy's got any Tesla projections for us. Oh, and then here's a letter on the CME group. This is the margin change. This was Friday. On Friday they sent it out. CME performance bond requirements. What does this have to do with silver? I don't know where the details are on this. Effective Monday. Current. Okay, so who knows? That seems to align with what we've been seeing from other coverage. Okay, let's go check out Troy. Troy. There we go. Let's see what he's up to. So Troy, well, he hasn't posted since October. Where's our boy Troy? Oh, here we go. He's got some replies. One Mrs. Troy. We had the best Tesla EV sales analysis. X made him leave. Now we end up with some uninformed bots person making the wildest Tesla delivery estimates. Truth is the last thing about Tesla. Can you give us a hint? Deliveries this quarter will be much lower than the 495 delivered last year, Q4. Well, there's a hint. I will tweet my estimate in 2 days. Oh. Well, let me see if I can see the current. I mean, I don't want to give away all this stuff. I'm not going to do that, but I'm pretty sure I'm... Oh, crap. I don't know what my stupid Patreon login is. I can't keep all this crap straight. There's too many logins, man. Everything's got a login. Well, apparently it's not that. I'd like to get an idea. Patreon. What is my... Oh, here we go. Okay. Alright, here we go. Am I... is this gonna work or not? I don't know if this is working. Whatever. I'll just really quickly subscribe again. We'll do it for you! Alright. I'm just resubscribing. Oh, I swear I was. I am probably double subscribed now, but whatever. Okay, so... this latest update was added on December 7th. So... Q4 2025 delivery estimates. Wow. Yeah. So I'm not going to give away his stuff. I'll just shout out Troy. But I will say, we'll make a little note here. You know, Troy's estimates. Troy Teslike. How do I don't even know how to properly spell his name, so I'll just like a Teslike. That's what it is. Troy. There we go. Troy Teslike. There we go. So I'm just gonna say that Q4 2024 deliveries 495.5K. That is the note here. Then we go analyst 448K. Troy's number. I won't give away his alpha, but I will say much lower than analysts. Analyst consensus. So I guess he's bearish right now, for what that's worth. That said, let's see here. Let's see. Registration dates, lagging data, production at Fremont, quality is pretty good, VIN tracking. Now, is this deliveries? Yeah, this is deliveries. Yeah, okay, all right. So deliveries, and then if we look at production, tax credit we know ended September 30th. We already talked about that. Prices have not gone down. That's something that's worth talking about. You know, this is something that I've seen talked about before. You know, my take, I personally expected a more aggressive Model Y. I suggested 39.9 wasn't enough, and it should be lower to get volume. But Tesla doesn't seem to want volume right now. Tesla is pulling an end phase. We will take lower volumes to maintain margins. and not cutting prices, eventually that catches up to them. As it did for Enphase. For Enphase, and now they're doing, PP, power purchase agreement deals, which I hate. Let's see here. Okay. Declining trend of production. Lowest Cybertruck production. Yeah, I mean, every segment's basically down. So, US down, China down, Europe down, all of them. Right. And then, now this is actually very interesting because Wall Street is forecasting 2026 to go up for deliveries. This is Wall Street, right? So Troy thinks the number will get worse. Troy thinks the decline will accelerate in 2026. Yeah. So leave the rest of the details to him, but I kind of agree that the Tesla is taking this path of maintaining prices and just sort of buying down interest rates. But I remember Enphase did this for years, and they just saw their sales decline. So they hold up margin, but like you're having a smaller network effect. You know, network effect for Tesla, I think, is one of the reasons why Tesla stock has done so well. Tesla's network effects, IMO, of selling a lot of cars helped pump the stock. So lower car sales borrow from the future for margins today. Interesting. Yeah. All right. Cool. Yeah, just a little broad red day here, huh? Okay. Anything else? How are the suits doing? China emerges as the fault line in silver's volatile rally. Enter China, world's largest consumer of silver. Oh, let's write down some of their notes. So, silver. Okay, so China is the world's largest consumer of silver. Export licenses for silver shipments are expected to be required Jan 1. CME increased margin requirements, DEIS 29. And then we have let's see here. Goldman says the Jan 1 license was known about since Oct 15. China is not a major net exporter, so they're somewhat of a net exporter. Limits the pool of eligible shippers and signals a preference for preserving domestic supply. Oh, I see. Signals a critical mineral style pump preservation. Elon, we also earlier saw Elon said the rising price of silver is not good as it's an input metal. Combination of thin liquidity, depleted inventories, has added friction. Huh. Oh, yeah. Okay. Jeep Grand Cherokee. Oh, the Jeep Grand Cherokee. I think the Grand Cherokees are a great car. No, you can get, Leon, you can get it in the Meet Kevin app. Just download the Meet Kevin app. No, it was a Jeep Wrangler. It was an older Jeep Wrangler. And, you know, the newer 4xs, you can put them in 4x even when you put them in 4H, even if the road's dry, you know, just in preparation for snow. And they drive fine. This thing drove like really clunky. So I had to keep it in 2-wheel until I was in the snow. Then I get in the snow and it's brand new, so it's not salted. And I like to test my brakes when I drive in the snow, just like when nobody's around and I'm just on a straightaway. And it was really easy to lock up those brakes, which is good to know before you need it. So, somebody donated $5 to say, I've officially invested in House Hack. Ben was great. Are you okay with me shouting out my laundromat in San Jose? Sure. Hey, well, thanks for joining us in House Hack. That's awesome. Yeah. All right. Somebody says, good time to sell your laundromat before Gavin steals it from you to harvest equity. I love the Gavin hate. Oh, check out this new coffee mug I got. It's got a W on it. Check this out. Look at this. It's literally got a W. How nice is that? Isn't that nice? Look at this. One of a kind. You know, what would you call this? Abstract art or whatever? I don't really know what you call it. Probably abstract art. But I even love the little handle it's got. How cool is that? It's kind of wild. But, I mean, talk about, like, a unique clay mug, huh? I really like the W. And that handle's pretty sick, too. Yeah. Very nice. I like it a lot. Haven't used it yet. It's just been sitting on my desk. Anyway. Cool. So what else we have? I guess we should probably do a summary. Let's go through some of the goodies here. See, that's the thing about abstract art. Like, is nobody really knows what it is. It's whatever you decide it is. Yeah. So, all right, let's see here. Okay, we saw this with the supplier. Let's close this out. We saw the silver talk. Peter Schiff wants you to buy gold. That's also not a surprise. We saw the repo facility. The Putin call. Times don't have anything. That guy had to buy a chainsaw. Economist. Economist didn't really have anything for us either. The information dumped on Elon a bit. Oh, here's a Waymo piece. What's this? The long game behind Cozy Corner Laundry. Come for a wash. Nice. So nice. Wow, I love the app. Looks so good, Kevin. Thanks. I will be, of course. Oh, that's awesome. Welcome on in. Yeah, Mr. Realtor, that's gonna take some more time to analyze. Okay, so Waymo. Can Waymo justify a $100 billion valuation? Waymo's rapid expansion, blah, 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 so far this year, blah, 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 possible to grow faster than that. Waymo is an interesting example of a company with both hardware and software, where you can see large revenue base growing quickly without requiring extraordinary assumptions. 2.5 billion in annualized sales business. Expected valuation would drop to 40 times revenue. Still, Uber, Lyft, in contrast, have revenue multiples of less than 3 times. Right. Both are growing significantly more slowly than Waymo. Waymo gave more than 4 million paid rides in the third quarter. It's pretty impressive. Partnership with DoorDash to offer autonomous deliveries in Phoenix. Oh, that's awesome. So the store has to come out and put it in the car? Although Waymo doesn't need to pay for human drivers to run its service, there are big questions lingering about other long-term costs, like the cost of insurance, blah, blah, blah. Tesla, Zoox, competition, blah, 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 blah. How much did Reinvest raise in total? I don't know. I was just putting it up on screen. You know, this month, I mean, you could look. Most of these are investments because our AI revs or our rental income go into a different account. But it's pretty remarkable. You know, we announced the closing for the fundraise for December 31st. And, you know, we're looking at like 3.8 or whatever just for December. That's pretty incredible. Okay. All right, let's keep going here. So then we've got the 10-2 spread hasn't really moved. So I really think a lot of this drama is mostly nonsense. Although, you know, gold's down 4.5. The bond market's barely moving. All right, cool. What else? Then we've got WAPO. Musk's return to Trump's side revives alliance that could remake or rupture MAGA. J.D. Vance stepped in to broker reconciliation. The peace offering offers a glimpse into the next partnership. Well, they want his money. They need Donald Trump to donate for midterms and to keep all the youth. They need the youth. Says news on Iran saying they're at war with the U.S. could be hitting the market. Does that have to do with the protests? Yeah, I wonder if they're responding, like if they're saying this as a way to sort of respond to the protests. Saturday said that his nation is at war with the U.S., Israel, and Europe. They don't want our country to remain stable. Okay. All this crap's got to load on this webpage. There we go. Let's see here. Yeah, and keep in mind, we never actually ended up finishing negotiations with them. You know, it was all sort of a ruse. Like, we sort of, like, bombed them and then forgot about them. So, I don't love that. Oh, yeah, we looked at the margin data this morning as well. No smoking gun. We saw that. Let's see if Zero's got anything else. Nope. Okay. The Wall Street forecast. Silver's still down a chunk. Odds of a bank failure by Jan 31 have spiked to 31%. Oh. Oh, sorry. Hold on a sec. Let me try to pull this up. Bank failure. This is Polymarket? Bank failure. Oh, it came right back down. So that was just over the weekend. And look, it plummeted again. So that's really interesting. So you had this bizarre... I mean, there's no volume on this. So the fact that people are tweeting this... I mean, like, one person could put $100 in this. And you could totally rig this. But, you know, people on X don't tell you that. This is the downside of, like, just trusting X and then not watching it. Yeah. See, Polymarket is kind of brilliant because, like, they shill this stuff. And it's funny because they literally took the screenshot with $863 of volume. Like, basically one person betting against themselves. It's kind of comedy. So no surprise somebody came in and took the short on this. Like, even the longer term, here's $20,000 of value on the March 31st. Still pretty low over here. So, I mean, that's not stopping at least this year-end dip. I mean, look at this little droppy doodla here. We're getting a little bit. A little bleed, eh? You know what it is? It's everybody selling to diversify into house hack. Ugh, gotta get that real AI exposure, you know? Yes. All right. Should do a little summary here. All right. Let's see here. Wow. I have not seen so many emails for house hack right now, which I know the team's on it, but this is a lot of you are like, oh, I want to increase my investment. Well, that's very nice of you. All right. So, $370,000 just deposited, plus $200,000 not included in that $370,000 total. That's what happens when the fundraise is closing, I guess. Okay, so let's do a summary of all of this and break down everything we got. There's a lot. All right. Let's get this cooking. Oh, you know what would be interesting too is seeing the odds of a Fed rate cut. Let me pull that really quickly. Because I do want to see that too. Okay, here we go. Fed. So, odds of a Fed rate cut in January, only 16% now. Holy smokes. Collapsing odds. Shoot, I don't even know if I can keep this stuff organized. There's so much that we talked about today. There's so much going on. I'm going to have to honestly make like a little notepad here just to go through this properly. I mean, we'll go through silver, Fed, the bank rumor, then price targets, then Tesla. I think that's sort of broadly, maybe a little bit on Iran. But yeah, I mean, only a 16% chance of a rate cut there. Unless we get some good Fed speak there, it doesn't look like we're going to be getting a rate cut. That's probably because of the GDP report, frankly. That's pretty wild. All right. Okay. Cool. And then was there anything? There wasn't really anything in the way of AI news this morning, was there? There was just the information bagging on Elon, but I don't think there was anything really in the way of AI news. Let me see here. Somebody says 100% because of GDP. Yeah. Well, I agree with you. I mean, we were at 25%, and then we got the GDP report, which, if it weren't for artificial intelligence spend, that GDP report would be negative. So I always think that's worth considering. Anyway. All right. So let's go hit the topic. Stop talking about hitting the topic and actually hit the topic. Fiscal cash flow timing, treasury liquidity is not QE. Real QE will happen later, probably after a crash. Yeah, that's typically how it works. Cool. Well, today is one heck of a crazy day because you've got some insanity happening in the silver market, which is leading to talk about a potential bank failure, while at the same time, the president of Iran, in response to protests going on in Tehran, is suggesting that they're at war with the United States, Israel, and Europe. I guess maybe we should have finished the negotiations after Operation Midnight Hammer, which Donald Trump and Carolyn Levitt said they would, but then that next week negotiation never came. But forget about that for a moment. What's actually going on? Because there's so much noise today from not just the silver and banking drama, but also drama with the Federal Reserve. We've got minutes coming out tomorrow from the last Fed meeting, along with the weekly job numbers from ADP coming out tomorrow. We've got year-end potential profit taking. We've got also Tesla numbers to talk about, because at the end of this week, we're going to get Tesla delivery numbers, and Tesla is doing what I call the end phase. There's a lot to unpackage here. So let's just slowly go through it all and break it down. So very first things first, this is important to look at. Right now, the S&P 500, which is the orange line, is lagging substantially behind the rise in gold, which is the black line. I don't know why they didn't choose gold for gold, but whatever. And the silver line, which appropriately is silver. So I can't help but feel that safe haven assets memeing is a risky signal. And then you can see this divergence in these sort of normalized numbers here. You can see the divergence where usually gold and silver align with the S&P 500. They've really sort of wedged open right here, right? Look at this giant wedge that you've gotten, where gold has really rallied, which is something that you can see happen before a recession. So it's not the best of signals. And then, of course, now you've got this silver euphoria, which part of the silver euphoria and rally has a lot to do with China. See, China is the world's largest consumer of silver, and starting about October 15th, they pre-announced that they were going to start requiring export licenses to be able to export silver. Now, Bloomberg says that China is not a major net exporter, but not a major net exporter means they are a exporter, like net exporter of silver. So even though they consume the world's most amount of silver, they are an exporter of silver, and by having export licenses, they could kind of signal that, hey, we want to keep some of this for ourselves. And it sort of goes back to the whole like critical minerals drama. Like, remember when China was basically like, hey, we're going to have export licenses on critical minerals. Then Donald Trump is like, fine, I'll invest in MP Materials. And then MP Material goes from like $15 to $80. And then I remember in my course member live streams for my alpha report, I'm like, this is going to $100. Went to $104. That morning in the course member live stream, I go, this sucker's going down. It's going down fast. Get out. Sometimes a negative call is just as important as a positive call, right? And the stock's at like $52 now. I think it's going to 31. But it shows you that that sort of meme stuff happens in response to China and its export license drama. So in some regard, the drama with China around export licenses with critical minerals foreshadowed this silver squeeze. Because now you've got China going, well, we want export licenses on silver. And even though they're not that big of an exporter, they're somewhat of a net silver exporter, and therefore you get this silver squeeze, which is leading to massive losses from companies that are hedging against a rise in silver prices, which is usually not very volatile. You know, typically when you have something that's low vol that all of a sudden becomes really volatile, you risk margin calls. And that's why there were a lot of rumors circulating. And I don't like to give credence to a lot of these rumors, because I see these rumors, and I said it this morning in my alpha report. I'm like, look, the news of today is everybody's freaking out about this, like, oh, a bank is going under or whatever. And I said in my alpha report, this is probably bull crap, and you're gonna know, pretty fast if it's bull crap or not. We don't know. It could be accurate, but it's one of those things where, it's easy to circulate stuff like this, especially with AI these days. But basically, there was this story that was circulating that, so I pulled a screenshot up here. The story that's circulating is, at the time the story is written, 11:01 a.m. Eastern U.S. time on Sunday, there are reports claiming a systemically important bank, a major player in silver futures, failed to pay its margin call, and they were liquidated. The bank involved has been one of the largest players in the precious metals derivative market, and it blew past every risk limit, breached every covenant, and exhausted every line of credit. Like, even the grammar isn't that great. Like, I hate to say it, but like, I looked at this and I'm like, I've got a double space over here. I've got, a missing capitalization over here. New grammarians will say it's okay to start a sentence with and, but, older writers, like, probably people actually writing these reports, won't start a sentence with an and, typically. Younger writers might start a sentence with and. This is a big debate. I don't know why we're going into a grammarian debate. But anyway, this is a big thing that people are talking about. And then I have this up. This is totally unrelated. But I don't know, maybe people are fleeing silver and they're throwing money into house hack. But I was showing this on my course live stream, just so you know what this is. These were just inflows, because we're ending our fundraise for House Hack. These were just our inflows, not rental revenues or AI income. But December's been great. I mean, we're almost at $4 million of inflows. I would say 98% of this is fundraising. A couple little deposits are in there or not. But the fundraise for House Hack has been really good. So I don't know, maybe that's why the market's selling down, is everybody is fleeing the markets. 75 bips on the Qs right now, at least. Could get worse, who knows. Or the silver market, oh my gosh, it's rolling over or whatever. And they're diversifying into House Hack. Not investment advice, not a solicitation. Every investment has risk. I don't know. But, that was one of the things that started a rumor mill this morning. Copper is still doing fine, and a lot of precious metals have absolutely been killing it. Look at palladium. Palladium's up 112% year to date, but today it's down 16%. You don't usually see this kind of volatility in metals. So that's why, there is some idea or argument that, yeah, maybe when you have so much volatility, you could create margin calls that lead to a cascading effect and a bank failure. But in my opinion, if we were actually seeing a bank failure unfolding right now, insiders would be trading it. We would be seeing the market dump way more than this, and this yield curve would move because people would fly into the 2-year. We're not seeing that. And so to me, if I go look at the 2-year right now, the 2 years down 2 basis points, the 10 years down 2 basis points. If we were seeing some form of a crisis, like some kind of a banking crisis style shock or whatever, we would see the yield curve skyrocket right now. Look right here at the banking crisis era right here. The yield curve rapidly steepened and uninverted because what happens practically is the 2-year plummets and the 10-year doesn't go down that much. And so the curve widens. In English, what happened in the last banking crisis ain't happening right now. Kevin, ain't the word. I know. So anyway, I'm not seeing signs in the market that actually say this is anything other than just sort of like meme style momentum, like a GameStop style momentum that's slowing down in the face of new margin requirements that went into effect today on the 29th that were announced on Friday, right? It kind of aligns perfectly. Like, sure, there's some drama talk from Iran, but those are drama mamas. There's always drama talk out of Iran, right? Like, I don't think this is anything to get your panties in a knot over. I've got silver over here down, 8.7%. But I mean, look at the meme it's done. This is insane volatility. Now, this is why you have to be careful of Twitter, X, whatever you want to call it. But like Polymarket Money posts, and they get like 1.6 thousand likes on this. They post this, odds of bank failure by January 31st, 71%. And so every idiot and their mom, sees those charts and they're like, oh my God, honey, 71% chance of a bank failure. Oh no! Get your money out of the banks. And that's the noob. And then the pro looks at this and they're like, dude, what's the volume on this? And so when you zoom in, it's literally in their screenshot. The volume is $800, which means some jackass, bet like $400 on a bank failure. He basically bet against himself and bought up the order book to basically guarantee a bank failure with $400. So this is the downside of very illiquid markets. This, by the way, is why Robinhood loves these markets. Robinhood and Polymarket and these companies love betting markets because you can go bet on the most arcane garbage and there's no liquidity. And guess who makes most of the money? The brokers, the Robinhoods, the Polymarkets. They make all the money on the spread. Why?
It's because that's why.
Yeah, it's because that's why. So, anyway, sure enough, when you then actually go look at the odds of a bank failure and the volume has actually increased, somebody put another $400 in, basically took the opposite end of the trade and bet it all the way down to 9%. So it's probably like undervalued now. It's so stupid because if you go out to March 31st, where there's actually a little bit more volume, $20,000 of volume, you're at about a 26%. It's all fugazi. It's all fugazi. It's all noise. It's all annoying. I don't see anything right now in the market that's saying this is actually like a real issue right now, other than it's just anti-meming. That's what we've got going on here. Anti-meming. Along with, Elon's like, oh, this is not good. Our input costs are going up. Yeah, Elon also got his fair share of hate today, which is worth talking about Tesla just a little bit because Tesla's going to report delivery numbers at the end of the week. We'll talk about Tesla in just a moment, though. I did want to talk briefly about first the Fed and year-end price targets, and then we'll talk Tesla. So, first of all, Federal Reserve right now, we're down to a 16.1% chance that we're going to get a rate cut on my birthday, January 28th, which I'm a little bit disappointed about. So what I'll probably have to do is I'll probably have to go on like a Disney vacation or something to make myself feel better because we're not going to get rate cuts. But that's okay because it means the economy's booming. I mean, we pretty much all are of the same mindset that the reason the rate cut odds have plummeted is because GDP came in so high for the quarter. Why is GDP coming in so high? Oh, we should look at the Atlanta Fed real GDP too. Well, it's because of artificial intelligence spend. We already know this. Goldman Sachs tells us bluntly, if it weren't for artificial intelligence, we would see an absolute collapse in GDP. Right now, the forecast, by the way, for Q4, Q3 came in at like 4.3%. Q4 estimates are at 3%. A lot of this is, as we say, based on artificial intelligence spend. These are really, really high numbers. And the spend is wild. And that's why, a lot of people are jumping on the bandwagon of data centers in space. I don't mind. I'm an investor in SpaceX, but I think it's loony beans. I don't think we're going to artificial general intelligence. I think the chip investments are overblown. I've been saying that since 2024, and I've not been saying that means sell the chip stocks. I'm just saying, like, at some point, it's going to U-turn because we're not going to hit artificial general intelligence. That is a stake I will put in the ground. We're not going to AGI. So that's why I think Sam Altman, will falter, because he's spending like AGI is coming tomorrow, and it's a bad investment. That's why we're so excited about like what we call real or practical artificial intelligence. So I look at companies like ServiceNow, or UiPath, which I think is a bargain right now, or Palantir as companies providing actual artificial intelligence for companies. We're launching our AI at a very small scale. We've got a coupon code expiring soon for our AI. So if you want to get in before we drop it, you could get lifetime access to our real estate AI. And you can learn more about that at househack.com or reinvest.co and the development phases or whatever. But like these are actual real products that, when somebody's like, wow, let me go type in a zip code, and they look and go, oh, smokes, that is a good deal. I could snipe $100,000 on that deal or whatever. Like that's how people are building their net worth through real estate. That's great. These are practical AI applications, not to be confused with sort of artificial general intelligence. AGI bets, I think, will all crash. But longer term, like actual practical, I call it EAI, encyclopedic AI, those sort of investments that actually help people be more productive, snipe deals in real estate, or what Palantir does for businesses with Ontology, or what UiPath does, or ServiceNow does, or even Salesforce does. Those are ways that people can become more efficient. And ultimately, it's good for companies. It's good for S&P 500 earnings, which leads us to earnings forecast for next year. Do keep in mind, though, that as we see these earnings forecasts for companies, the people who generally lose when these companies do so well are, well, people, right? So people, unfortunately, don't get the benefits of these earnings calls talking about operational efficiencies. In our course member live stream this morning, we were talking about how ServiceNow is talking up how their margins are going up because of AI operational efficiencies. To me, all that really means is less hiring. They're going to hire fewer people because they don't need as many more people. And who wins? Companies. Now, it makes sense also why margin has gone up, but this is also part of a risk in the market, is we have concentrated into these Mag 7 stocks, mostly with significant margin levels that we've never seen before. These are the highest margin levels we've ever had. We're at $1.2 trillion. Is this millions? No, wait, hold on. This is millions times millions. Shoot, how many more zeros is that? If I add 3, that'd be billion. That's $1.2 trillion in margin at FINRA. That's insane. And we're rising between October and November, and November ended as a red month. Remember when we're like, hey, it's probably going to be red until December 9th and then bullish, right? But anyway, that was one of our calls in the Alpha Report. And it was spot on. Knock on wood that we could keep doing that. You could join and get lifetime access before the coupon expires. MeetKevin.com. But, like, this is insane. We are growing margin right now in this month at a 31% annualized pace. People are going ham over drawing on margin. And it's like M1 Finance and Robinhood, all the brokers are like, please take on more debt because they make more money off of you. But it's so bad. It's so bad for the economy because it's going to create a massive crash. And this is why I think the forecasts are loony. Like Wall Street expects its 4th straight year of gains next year. Bloomberg interviewed like 21 different institutions and forecasters. So think like Bank of America, Citi, whatever. Goldman Sachs, right, UBS. Of the 21 surveyed, there was not a single negative forecast. Every single institution thinks that the market will be positive next year with an average increase of 9%, while margin is at all-time highs, while Sam Altman's doing the Sam Altman. And this would be the first time in 20 years, by the way, you would have had the 4th straight year of gains if it happens in 2026. So to me, as a contrarian, it sounds kind of bearish. But on the flip side, I hope it's true because, like, I kind of want the market to keep going up and then we can IPO, an AI startup. recessions delay those things, right? So anyway, that's why like I'm on the middle. I'm gonna share what I'm seeing, and ultimately you do you, right? But these year-end price targets are wild, in my opinion. Not only that, but it's worth remembering that bullishness pays, right? You make a big prediction, you pump the stock market, you get more people throwing AUM into your bank, you make more money, you win. So there's a reason, like it pays to be bullish, they say. Like Tom Lee doesn't raise, billions of dollars to buy Ethereum by being bearish. He raises money for Ethereum by telling you it's going to 10x within the next 2 months. By the end of the year, he says. Right. Similar story, by the way, at Tesla. So we did a little bit of an analysis on Tesla. Tesla has a little bit of a problem right now because Tesla has quite a few negative catalysts coming up. I'm going to put some of these up on screen. But I'm not very excited about the catalyst that Tesla is facing right now. Tesla has deliveries coming up at the end of the week. I've gone ahead and thrown the estimates on the Meet Kevin app. So the delivery estimates for the year end per Wall Street are that we are going to sit at 1.65 million deliveries. Wall Street is expecting that to rise again next year, which is very interesting because Troy Teslike, whom I respect as a Tesla analyst, he actually thinks that the decline will accelerate for Tesla deliveries in 2026. Now, this also compounds with some of the other negative catalysts that we have. Tesla's going to have to realize a loss in GAAP earnings due to their Bitcoin losses, given that we have to mark to market every quarter. The vehicle tax credit ended in Q3. That pain shows up in Q4. Now we have another negative pain, though. While we have the home tax credits for the purchases of home energy or solar systems ending in Q4, that pain shows up in Q1. Obviously, we have seen delays in Robotaxi and Optimus. We could see that, over here very clearly. The information has sort of a reconciliation here about how Elon Musk made these promises or these forecasts of Robotaxi service being available to half the population by the end of 2025, subject to regulatory approval. In October, dialed that back to 8 out of 10 metros. And now we're still only in Austin and San Francisco with humans in every single customer ride, and we're 2 days before the end of the year. Elon at one point mentioned you could go to sleep in your Tesla and wake up at your destination by the end of the year. This idea that we would have 5,000 Optimus robots by the end of 2025 turned into 2,000, which turned into basically very few because of technical challenges with the hands. Now they're pitching that SpaceX is going to take Optimus robots and send them to Mars, and the Optimus is going to go to Mars. So obviously the information is casting a little bit of jade here. And so, make of Elon's predictions what you want. You kind of can't take away, you got to give Elon credit. They've done some incredible things. He's got the best ADAS software that exists. I think you've got a great company. I think the valuation is very, very high. But he's done fantastic things with Starlink and SpaceX as well. I mean, everybody's trying to copy him with the reusable rockets. I mean, good for them. Hey, some of it might be hype, but, I do think that these delivery forecasts, which for Q4, Troy's not very happy. You could obviously follow his Patreon to get the exact numbers. I'm not going to give away his numbers, but I will say that his forecasts are much lower than the analyst consensus of 448,000 deliveries. Q4 last year was 495. This year, analyst consensus is 448. He's way lower, and he thinks it's going to keep going down. I personally don't disagree because I mentioned that, I was expecting a more aggressive Model Y, cheap Model Y pricing. When they went for $39.9, I made a video and I said this isn't enough to get volume going. And so it seems like Tesla's pulling what I call an Enphase. So Enphase did this really interesting thing where, and I didn't like it, where I said, hey, this is probably going to go back down to $30. If you watch my videos, you see me say that. Even when it's like $70, I'm like, there's a shot this is going back down to $30. And sure enough, it has. But one of the problems that Enphase has is they basically said, listen, we're not going to risk reducing our 40% margins because we want to maintain our margins. We want to maintain our pricing power. We're not going to reduce our margins. We'll just sell fewer inverters. Well, it got so bad that their sales have plummeted so far that now they're saying, yeah, we're going to have to make deals with power purchase agreement companies. Well, I'm like, well, that's terrible, because those companies don't care about the quality of the product. They just want the cheapest product. So your margins are going to have to go down. So now your sales are down, and now you're going to have to lower your margins. So that's what I call the end-phase footprint. You know, we've been warning about this for quite a while, and certainly in our Alpha report. Remember, you can join that at mekevin.com. But Tesla is unfortunately now trying to follow a similar path. Now, I'm not saying they're going to have a similar outcome as end-phase, but I think it's really bad to say, oh, we're going to be stubborn. We're not going to drop prices. We're just going to cross our arms and go whatever. And, you know, if sales go down, who cares? We're on to bigger and better things, like Optimus or robotaxis. And I'm like, that's cool. I mean, that's not how I would run the business. But, you know, I'd be creating more models that people can buy today with the best ADAS system they have. That's what pisses me off, man. You literally have a company that could so easily print many different models of vehicles that people want. A Model 2, a minivan, a Sprinter van. Put a Tesla, make every Amazon delivery van a Tesla. Sign a contract with them already, would you? Like, that's where the money is. Like, don't go straight to semi-truck. Let's do box van. Let's go. Like, there's so much we could do. So much safer with the best ADAS that exists. Who cares it's not 100% full self-driving? It's 99.9% better than every damn human out there. It's so good. That's what you need at Tesla. So I get frustrated, right? But anyway, as a result of, unfortunately, sort of these bearish catalysts, when we look at their current PEG ratio is sitting at 6.86, which does suggest a downside of 75% to Tesla's fair value as a manufacturer and a 60% downside as a servicer, which makes Tesla a very, very desirable stock to sell right now. I am very bearish Tesla in the near term for their price action. I think it's built up on a lot of hope. And I wouldn't be surprised if a lot of people are diversifying out of Tesla, or at least setting some trailing stops or selling calls or whatever. But, you know, whatever. I'm not short Tesla. You know, I've got no horse in the negative race. I mean, I've got Tesla stock left in like retirement accounts or my HSA and stuff. So, hey, like those accounts are great. Thanks, Tesla. But like, I share this to also share my enthusiasm that hopefully somebody at Tesla can listen and be like, you know what? Yeah, like, why don't we just sell what we know works now? You know? But, you know, whatever. So, you know, putting all of this together, there's a lot of noise right now. I think the market is unfortunately having to discount that we're not going to get a rate cut in January. The silver and banking thing, I think, is just noise based on what I'm seeing in the bond market. I'm not seeing anything that suggests this is a real issue. I do think there are real risks to some valuations at companies that are very high. But on the flip side, I think there are also very cheap companies out there that will have some great opportunities for long-term growth. So yeah, there you have it. If you haven't yet checked out househack.com, remember our investment closes in 2 days. And we will also be releasing our AI app within the next couple days here, which means we're going to be raising the price. And so we'll be ending the coupon code, which is release the app. You could use the coupon code release the app for both the Meet Kevin membership or the HouseHack AI. Cool thing about if you get the lifetime access for the HouseHack AI is if we move this to when we move this to an annual billing model, you know, you'll have lifetime access and other people will be paying what I expect to be $200-300 a month. And so I think you can get in a bargain by basically being one of our alpha or beta testers, if you will. You could do that at househack.com. And then, of course, if you want to join the Meet Kevin membership and get all those courses and the top 10 stocks that I'm buying for the next 10 years, as well as the Alpha Report every morning, you can do that at meetkevin.com. Remember, the coupon code is release the app. And so there you have it. Yeah, Tom from MySpace. Yeah, that's what we need. So there we have it. Thanks so much for being here, and we'll see you all in the next one. Goodbye, and good luck out there.